Very grateful to the Aldermore team for the opportunity to share some of the latest findings from BDRC's ongoing programme of research with private landlords across the UK. My brief this afternoon is to spend 25 minutes getting you inside the head of the private landlord. I think we've heard this morning a lot of kind of information from the lender's perspective, the state of the market from the lender's perspective. My job is to give the other side of the other side of the coin, if you like, and kind of share how it feels out there in the private rental sector from a private landlord's viewpoint. My session objectives are these, really just to share a quick profile with you of the shape of the private rental sector. What do smaller landlords look like? What do larger landlords look like? To bring you right up to speed with how they're feeling at the moment. Heard a lot again, haven't we, in the preceding sessions about the fact they're battered and bruised. Well, yes, they are, and I'll bring that to life a little bit for you. And we'll have a look at what they say they're going to do with their property portfolios. So again, we've heard some kind of hypothesis around, will they shrink, will they exit the market, will some landlords expand? So I'll share with you our findings on that and how they will fund their portfolio activity. And then I'll finish the session with a quick look at actually the extent to which they do use buy-to-let funding. Those less close to the market sometimes confuse the private rental sector and the buy-to-let market as being the same thing. Well, they're not, and I'll bring that to life a little bit for you in the presentation. My job is a market researcher. It's what I do day to day. I lead a couple of quite large surveys across the private rental sector, and I'll be drawing on those for the evidence that I'm about to share with you. The key programme is called the Landlords Panel. That has two components. One is a quarterly opinion poll of members of the National Landlords Association. So the NLA has about 50,000 members. They're the largest membership body for private landlords in the UK, and once a quarter we interview large samples of that membership. We talk to about 1,000 members a quarter, and we supplement that with about 250 interviews with smaller landlords, those people that we find on a large kind of online consumer survey panel who self-declare as being a private landlord. So those are the two data sources that I'm going to bring together for this interview. And a lot of the data comes from the latest wave of this research, which we did just a couple of weeks ago. So this is very kind of hot off the presses, as it were, very contemporary insight from a private landlord's perspective. So what do these guys look like? What's the shape of the private rental sector at the moment? Here are some, I hope you can see that okay at the back of the room, just some kind of key headlines for you in terms of the shape of the PRS. To start with, best estimates suggest there's about 2.5 million private landlords in the UK. So the source for that is HMRC tax returns at the start of this year. About 2.4 million people said, I've got at least one additional property on their tax return. So that's the best guess there is in the marketplace for the number of private landlords. From the National Landlords Association survey, we see an average portfolio size of about 8 properties, worth about £1.3 million, generating a gross rental income of about £60,000. 2/3 of these guys have at least one buy-to-let mortgage, suggesting a third of private landlords are unencumbered and don't have any borrowing. The typical rental yield achieved is about 5.8%, and that's been very consistent over the last couple of years. And about a quarter of private landlords declare themselves to be higher rate taxpayers. So that's just half a dozen kind of key snapshots from that survey of NLA members that took place just a couple of weeks ago. What we can do, though, is to contrast that with the survey of small landlords, that other quarterly survey that I mentioned, and the data looks very different. If we just reach out into the population and say, are you a landlord? And 250 people say yes, their responses look quite different. So on average there, the portfolio size is around 3 properties, worth about £840,000, generating a lower income of about £34,000, and a much smaller proportion of these guys actually carry buy-to-let borrowing. Only 4 in 10 smaller landlords are encumbered with buy-to-let borrowing. So the majority are cash buyers in this part of the market. Their rental yield is about the same, 5.6%, and they're slightly more likely to be higher rate taxpayers. So 1 in 3 smaller landlords are higher rate taxpayers. So and I'm sure if you are a landlord, if you're a broker, you'll know these differences across the marketplace. Landlords look very different across the market, and it's misleading to kind of lump them together as one homogenous group, because frankly they're not. So how does it feel? How confident are you as a private landlord that your own business will do well or very well in the next quarter? This is a question we've been asking for 10 years. Every quarter for 10 years, we've gone to the market and said, how optimistic are you as a private landlord? And the line on the chart there is the proportion of landlords telling us, I do feel good or very good about my individual prospects as a landlord. And you can see how that line has changed over time. A couple of headlines to draw your attention to. The first is the distinct impact of the credit crunch. Pre-crunch, 3/4 of landlords were telling us, yeah, times are good, I'm feeling very good as a landlord. That collapsed very quickly at around the time of the crunch to a point where less than half of landlords were saying, yeah, I feel good about my prospects. A very significant hit on confidence levels. It took a long time to rebuild, as you can see. And just before George Osborne got up and delivered the budget in 2015, we were back to kind of pre-credit crunch. In fact, we'd exceeded pre-credit crunch levels of confidence. Landlords were feeling pretty bullish, although it had taken a long time for that confidence to return to the market. But it fell away in exactly the same way as we'd seen previously in the period after the 2015 budget. And it actually fell to levels lower than those that we'd seen at the time of the credit crunch. So the impact of everything that happened from government in 2015 was more significant for landlords than the credit crunch, which was interesting. And you can see, subsequently, we've been bubbling around at relatively, historically low levels of confidence. So the headline here is landlords generally aren't feeling as bullish as they have been, certainly, around their near-term prospects. The number in the red bubble there is the equivalent number from the small landlord study. That segment of the population is feeling slightly more optimistic than their larger, more established peers. We collect information on a range of other confidence indicators. What's the outlook for capital gains on your portfolio? What's your view on the UK's private rental sector generally in the top right-hand corner? What's your view on the prospects for rental yields? And what's your view on the prospects for the economy? And you can see clearly, you don't have to be a researcher like me to see, whichever way we look at it, landlords are just feeling the pain a bit and feeling less optimistic on these key indicators of their business models, if you like. The most significantly affected confidence indicator is the one in the top right-hand corner, your outlook for the private rental sector generally. That's down 33 percentage points in a couple of years. So the general sense out there is, it's tough now. It might get tougher potentially. But again, smaller landlords, those with 1, 2, 3 properties, are feeling more optimistic. It's the portfolio end of the market that's feeling the pain most sharply at the moment. Now, one of the key drivers of landlords' confidence is tenant demand. The extent to which they tell us that if they had a void period in their portfolio, they could fill it quickly without a lengthy void period. And again, this is something we've been tracking for years in the study. And what I've done is just pulled together the last 3 years' data for you here on this bar chart. So the dark bar at the top of the columns is the proportion of landlords saying, I feel that tenant demand is increasing slightly or significantly. The light blue bar in the middle is, I don't think it's changing. And the darker bar at the bottom is the proportion of landlords saying, I think tenant demand is reducing to any extent. And again, I'd just draw your attention to the top bars on each of these columns that clearly suggest fewer landlords think tenant demand is increasing at all across the UK. That has reduced from 42% to 22% in the last couple of years or so. So almost half the landlords are now reporting they think tenant demand is increasing. What's happening is we're seeing a move to, well, I don't think it's changing, or even through to the bottom of the chart where we've got a higher proportion of landlords saying, actually, I think tenant demand is softening to some extent. Now, what I'm not saying is it's a tenant demand disaster out there. Of course it's not. But there are some early signs in our data that tenant demand might have plateaued across the UK generally. But that masks some quite interesting dynamics across the UK. Are there any landlords in the room? Quick show of hands if you're a private landlord. So 2 or 3 private landlords. Be interested to know whether the next slide reflects your experience in the areas within which you let, because our sample size every quarter allows us to look at this data by region. So we can look at exactly the same tenant demand data by UK region. And here all I've done is to rank this data from left to right by regional strength of demand. And what our Q3 data, just very recent data, suggests is actually tenant demand currently is strongest in the East Midlands. 4 in 10 landlords in the East Midlands, 4 in 10 landlords in Yorkshire and Humberside say, I think tenant demand is increasing in this area. If we move further across to the right of the slide, the weakest area for tenant demand at the moment is actually the northeast of the country. So landlords in the northeast are much less likely to think tenant demand is increasing there, much more likely, 2/3 of them almost, to say it's a no change situation in the northeast. And this is a very interesting area of the UK. It's the area with the largest landlord portfolios. A landlord in the northeast typically has 12 properties in their portfolio versus 8 on average. They have the highest incidence of voids and arrears, and they are much more likely actually, to rent to LHA claimants, housing benefit claimants. So it's a fairly unique profile of rental property in the northeast. And again, if I was thinking about renting a property in the northeast as a landlord, I'd just kind of use this data to say, there's some signs that the northeast might be a weaker area potentially, at least at the moment. But what's also interesting, and maybe in this geography, the landlords in the room can tell me if they agree with this, is that we're seeing the London market showing some interesting signs at the moment. Landlords in central and outer London are more likely to report reduced tenant demand than they are to report increased tenant demand currently. So that's quite interesting. And it's not just London, it's the broader southeastern market as well where we're seeing that. This is where their portfolio is. It should be said though, very, very frequently our landlord lives within 30 miles of the majority of their portfolio. So that earlier slide about the overall situation for tenant demand is an interesting one. It's more interesting, again, when we look within the UK at these different kind of dynamics. So how does all of this ripple through in terms of what landlords are doing with their portfolios? We ask a couple of questions. We say, what have you done recently in your portfolio? So in the last 3 months, what do you intend to do in the next 12 months? If we look at the last quarter, so this is Q2 2017, 9% of landlords told us they increased the number of properties in their portfolio. 81% said no change. 10% said they sold at least 1 property in their portfolio in that same time period. So that gives us a very slight net decrease in portfolio contribution, if you like, across the UK. 1% more landlords sold than bought in that time period. But I think it came up in the previous session. If landlords are selling, where are they selling to? Is this property leaving the PRS, or is it staying and it's being hoovered up by other landlords? Our data very strongly indicates that a lot of this sales activity is to fellow landlords. So again, we would say that's not a sign that the PRS itself is contracting, rather that property is being exchanged between landlords frequently. If we look forward across 2018 now, and say to landlords, what are you going to do in the next 12 months? 15% of landlords said, I plan to purchase at least one property for my portfolio. 6 in 10 said, I'll keep it the same. 20% plan to sell. So if we take this data at face value, that implies a slightly larger net decrease in terms of portfolio size looking into 2018. So a larger gap between buy and sell is projected to happen in 2018. Those looking to sell tend to be portfolio landlords. So there's some evidence that portfolio landlords are pruning out potentially marginal or underperforming properties in their portfolio. That looks to be, at least in terms of intended behaviour, what's going to happen in 2018. If anything, our data suggests smaller landlords are actually going to be more active in the PRS than their larger, more established peers, certainly in terms of acquisition behaviour. So if you're a broker dealing with smaller landlords, this data would suggest there's going to be plenty of activity for you next year. For those in the market to acquire additional properties, we say, well, how will you fund that? What's your funding strategy going to be for your portfolio expansion? And the good news for lenders, good news for brokers in the room, the majority of landlords in the market for more property say, I will use a buy-to-let loan to do that. At least that's their stated intention. 6 in 10 would be property acquirers say they'll use a buy-to-let loan. But as you can see on this chart, there's a range of other funding strategies in place. A lot of equity-based purchases. So 1 in 5 buy-to-let landlords tell us they will release equity to completely fund their next property purchase. A third of landlords say, I will use other forms of cash to fund that next property purchase. 6% of landlords will withdraw cash from a pension pot to do that. And 1% of NLA members will approach a lender for permission to let for their next property acquisition. That figure rises to 17% of the smaller landlords. So clearly there's a relatively ingrained belief. 1 in 5 smaller landlords think they will approach their lender and say, I've got an existing resi mortgage, I'd like to flip it to a buy-to-let loan to make that next kind of acquisition. So some quite interesting shapes in the data there for funding sources. And we give landlords the chance to tell us why. Why will you buy another property? Remember, around 15% of landlords told us they will buy next year. So we get hundreds of responses back in the survey, open-ended verbatim comments. We code them up on the left-hand side. So the top 3 themes are, I simply want to increase my income or expand my business. The second most common theme was, this is retirement planning for me. I'm looking to bolster my pension provision. And the third most common theme was tactical kind of investment opportunities. I've seen a great property on the market. It's right for my portfolio. That's what's driving my acquisition. And just a smattering of some of the comments there. Bottom left, there's a particular opportunity in Dover at present where prices are relatively low for the southeast and there's a buoyant rental market. So quite a tactical kind of opportunity identified there by a landlord. Top right of the slide, I'm planning for future income when I retire and to have a legacy for my children. So a slightly kind of longer term view coming through there. But remember, we've got over 10% of landlords telling us they're going to sell from their property portfolio in the coming 12 months. Here are the reasons why. And a lot of it can be attributed to all of the noise we've heard in the marketplace over the last kind of 12 to 18 months. So the impact of taxation and government policy is driving me to divest. I'm experiencing trouble with tenants, in particular properties, or I just want to release capital or pay down debt. And this is my strategy for doing so. So again, just a couple of illustrative comments here. I think the government is against private landlords, and I now find that I spend so much time on admin and so much more money than in the past that it's not worth my while continuing. I can use the capital for something better. Current changes to tax status make it less attractive and profitable to continue to hold properties. More regulation is leading to increased costs, which can be difficult to recoup from tenants. And that was the conversation we had in the panel session earlier about that latitude, that ability, frankly, now to continue to levy increases in rent as your kind of go-to strategy for cost recovery. There's less opportunity, we think, for landlords to do that. There are other possibilities open to landlords, though, in terms of mitigating, in particular, against the taxation burden that's coming on stream now and over the next 2 or 3 years. So we asked landlords whether or not they've done anything with regards to structuring as a limited company or transferring ownership or any other strategy to help mitigate against some of this stuff. 7% of landlords tell us they've already transferred property or properties into a limited company structure. So extrapolating that, we estimate somewhere around 165,000 landlords out there have taken that action already. A similar proportion, 6% of landlords say they've transferred ownership of property into a spouse's or a partner's name. About 140,000 landlords. So somewhere combined, around 1/3 landlords have done something like this to help offset some of the kind of costs coming down. And what's interesting here is we compare the data with the smaller landlord volumes on the right-hand side. Actually, these type of tactics are even more attractive potentially to smaller landlords than their existing kind of established peer group, at least in terms of stated activity. So smaller landlords twice as likely to have set up a limited company structure as an existing kind of larger landlord. Qualitatively, when we do focus groups with landlords of all shapes and sizes, they tell us, actually, I am looking at a limited company structure, but it's not without its hassle, it's not without its cost, it's not without its risk. And some are telling us, actually, they think this will be the next area of focus for government, actually. If it seemed to be too popular a loophole in terms of, private landlord strategies. So what about borrowing then? I said at the outset we'd talk a little bit about landlords, and I'd show you the shape of the private rental sector from a leverage perspective. Here's a very straightforward pie chart that just indicates there are 3 segments in the PRS. There's the segment that doesn't owe any money. In research terms, we refer to that as the lucky bugger segment. That's kind of jargon, but that's how we refer to it. So yeah, 1 in 3 landlords don't owe any money on their portfolio, which is a nice place to be. At the bottom of the slide there, about 1/4 of landlords owe money on some, but not all, of their properties within their portfolio. And then on the left-hand side, 4 in 10 landlords tell us they owe money on each of their buy-to-let properties. And where there is borrowing in place, typically a landlord has 6 individual buy-to-let loans, typically with 4 different lenders. So the average borrowing repertoire is 6 loans with 4 lenders. Clearly that picture looks very different for smaller landlords. 6 in 10 smaller landlords own their portfolio outright, whether that's 1 property, 2 property, 3 properties. And on average, that segment has 1.8 buy-to-let loans on average, so a lower exposure to buy-to-let. This is a table with lots of numbers on. All I wanted to do on this slide is to illustrate that we can produce kind of data that looks at buy-to-let exposure by different portfolio sizes. So this table, reading from left to right, shows data for landlords with 1 property right through to those with 20 or more properties on the right-hand side of the table. And just a couple of kind of comparative dimensions for you here. 1 buy-to-let loan on average held by landlords with 1 property, unsurprisingly, rising to 19 individual buy-to-let loans held if you have 20 or more properties. £175,000 owed on average if you're a 1 property landlord, £1.7 million owed if you're 20 or more properties. But interestingly, across this table, the typical LTV, or the estimated loan to value, regardless of your portfolio size, is about 50%. So regardless of where you are in terms of portfolio size and borrowing, you typically have an LTV of around 50%. And just before I finish, kind of hinted at this in the panel session, a lot of focus on, is it getting harder to access buy-to-let finance if you're a landlord? A question we've carried for a few waves on the study now, where we've asked respondents, if you've applied for a buy-to-let loan in the last 6 months, were you required to produce more evidence to support that application? And over a half of borrowers said yes, that was the case. 53% of recent borrowers said, I had to bring more stuff with me in my conversation with the broker or in rare occasions directly with the lender. And a follow-up question that says, so do you think it's getting easier to obtain buy-to-let finance in the last 6 months than any previous experience that you've had? 43% of respondents on the right-hand side there said it's